Right. Hey guys, so back with another video after a while. I've been preparing this presentation for you guys. Um, First of all, this is going to be the first part of a two-part series going in depth, talking about my strategy. So yeah, this is the first part is going to be a little bit of me, blah, 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 talking, and showing you guys a little bit of the main concepts behind my strategy, right? And the second part, the second video, will be me showing you guys on the charts, just like I did my first video. But I'm going to be going a little bit more in depth in my strategy. And so yeah, so this is the first part. I'm gonna get going, start up for you guys, and yeah. So yes, as you guys know, it is the 5-minute opening range breakout, well known as the orb strategy for NQ. All right, so what is it all about? Right, so the framework basically it's the market is the Nasdaq. I usually trade New York session and London session. I don't do London as much, all right? But it does work on London, just so that you guys know. If you're gonna wake up that early, it works for London as well. So, but I usually work with the New York session. The main idea, as you guys know, is the opening range. So the first 5-minute candle, I mark out the high, the low, and the midpoint, which is the 50% on the Fibonacci tool. Now, for preparation, so what do you do before and during um, your day, right? So what do you do before is you're going to wait for market open. While you do that, from 8:30 to 9:30 or whatever, 9 to 9:30, you are going to be marking very important areas. So you're going to be marking previous day's high, previous day's low, Asian and London sessions highs and lows. Now, Asian session and London session highs and lows. If Asian session was already swept by London, you only have to put London session or and the opposite way. If Asian lows were taken out by London, you only have to put London lows. And I'll show you guys a couple of examples in the second video so that you can see exactly what I mean. Now, during right after 9:30, 9:35 is when the first 5-minute candle closes, and that's when you're going to draw the high and the low of that candle and the midpoint. Now, what are my entry triggers? Now, this is very important, and it's going to be a lot more easier to understand um, on my second video than it is now. So my entry triggers basically so that's the reason why I put the high and the low of previous session and previous day highs and lows as well, because those are areas in where there's liquidity, right? There's resting orders, and so it's an area where price may or may not react to. So that's why we have to watch out for liquidity sweep. So when we see a liquidity sweep, we could enter off of that. Now, the orb, the orb, so basically the opening range is basically known as a support and resistance area. So there will be sometimes some fake outs, and it will be easier for me to show you guys in the next video. But let's say we have the opening range high and low. And let's say, for example, we do have a break of the high of the range, right? Usually, obviously after the 5 minutes, I jump to the 1-minute chart and I wait for a 1-minute break of the range to then look for my entry. So let's say that happened, right? I have a 1-minute candle that broke the high of the range, for example. Let's go with the high of the range. And right above it, not too far from it, there is London highs. Okay, I will be careful and I won't enter just yet, because the reason why is there's not enough space for me to trade there, Because what if I enter that trade and right off the bat I get swept from London highs, right? So I'm very cautious for those levels because they do have a reaction to it, and I'll show you guys exactly in the different examples that I'll show you. So yeah, so as it says here, liquidity sweeps grab on either the opening range or the session levels, and also we also can look for the break and retest. So we have a clean breakout, then a retest of the orb, and then we enter longs or shorts depending if where we broke. Another area where I'd like to enter is the 50%, the midpoint of the range. So it is definitely an area where price rejects quite a lot, and I do like to enter on the 50% midpoint of the range. Now, for my stop loss, okay? For my stop loss, I always put a stop loss, by the way. I always put a stop loss. Please don't put a stop loss, guys. You have to put a stop loss. I typically aim for around 15 to 20 points. I'm going to be honest with you. I usually go for around 17, 18 points for my stop loss to give my trade some breathing room, right? So, because in those times, in those at market open in New York session, there's a lot of volatility and price moves very, very quickly. So I want to give my trade as much space as possible uh, for me to also see if the trade is valid or not. Like if I do see that price is not going my way whatsoever, I can stop earlier instead of losing that amount of points. So it's an area where it gives me time and space for me to think and see how my trade is going. But usually I'm going to be very, very confident with my trade. I'm not going to enter in an area where I know that price is not going to go my way. But obviously it's the market. You know, you can't predict all of the time, right? So, but I like to have this um, for some space. And like it says here, stops only when level is invalidated, right? So, and also, yes, your stop losses, they have to be somewhere logical as well. And that's why I have this 15 to 20 points, because sometimes it's not always the same. Um, and so you even have it behind a liquidity sweep or beyond the opening range high, low, either past session levels or um, any level really. Also, there's the midpoint as well as is an area like where I like to put my stop loss. And yeah. Now for take profit, on the other hand, I'm gonna be usually looking for either previous day highs and lows, either also Asian session high and lows, London session high and lows, and either opposite side of the opening range depending on how I'm trading, and also the midpoint. So those are definitely, so it's pretty much the same concept as my stop loss, but the stop loss I have an exact amount of points. Why? Because that's my risk. That's my risk for the trade. How much do I want to risk? But in take profit, I can extend it a little bit more because I always want my profit to be more than my loss. So yeah, so aim for these different levels. And there is other levels. This is the second part of my take profit. Let's say you don't have levels to go hunt for. So let's say there's no previous day. Like let's say we're at all-time highs here now on NASDAQ. Let's say I don't have like, there's lows but they're super far away, or there's highs but they're super far away, or there's no area for price to really go and hunt. I usually use the Fibonacci tool. And so I apply the Fib tool to the opening range, and like I said in the other video, you guys will see exactly what I mean. And these are the points that I have on the Fibonacci tool. So I have my 50% marked. I also have the 0 and the 1 marked. So that's obviously, but they don't help for much because it's just my opening range. So I have the 50% on there. I have the minus 100%. And you'll see why it's minus 100%. You'll see. I'll explain that to you guys in the next video. But usually price tends to go after it breaks the opening range. If there is no levels for us to go hit, price tends to want to go and hit this minus 100 target, right? Here, the minus 200, between minus 200 and minus 250 is an area where price usually likes to bounce off of. It's very rare that it goes all the way down there, but it likes to go. Now, the really, really rare zone is the 400 zone. Now, that usually I go hunting for the minus 400 zone if we've completely passed this 2 to 250 zone. If we completely ran through it, that means we are definitely going to go hit this minus 400 zone. But as you guys know, I will explain it to you guys more in detail in the next video. I'm saying the next video a lot, but it's just so you guys can are comfortable in the fact that yes, I'm explaining this to you, but you will have a visual in the next video, and that's why I'm repeating it a lot. Sorry for being that repetitive. Now, this is a very important part of my strategy as well. This is actually probably one of the most important parts of my strategy. ES, right? The S&P 500. Because they are correlating pairs, right? ES and NQ. I do have the two charts up when I trade all the time. And I do the same thing I do for NQ, I do for ES, so that I can see where what ES is doing, right? So let's say, for example, ES behavior, let's say ES and NQ both break highs. So let's say they break the opening range and there's a lot of bullish momentum. And let's say there's no highs that we need to go hunt. I'm taking longs on NQ very confidently because there's no areas where ES will reverse off. Same goes for if we're going low, right? If we break low on NQ and on ES, I'm going to be confidently taking NQ shorts. Now here, if NQ breaks high, but ES lags, weaker move, possible fake out. So that's when I know that there's going to be a fake out. The same thing for, let's say, if ES sweeps liquidity, then rejects, then I know that NQ, I'm going to prepare for a reversal, right? So it's just these different concepts, and I'll show you guys, once again, I'll show you guys in the other video. But it's just like, for example, let's say we break the orb high. I always take the orb high as an example. Let's say we break both on ES and on NQ. All right, we broke and it's looking good, but ES, we haven't taken previous day highs. On NQ, on the other hand, we did, for example. Let's say we did take previous day highs, and that's why NQ is still going up. I'm not going to take a trade on NQ yet because ES hasn't swept or reacted to previous day highs. So I wait for ES to do its thing. Now, if ES sweeps previous day highs, and now I see a reaction, I always wait for confirmation. I see that it's sweeping, then I know that, okay, it was a fake out on NQ. So I go on NQ, I know it's a fake out, and I hit the short button and I look for a different area. Either if I'm really far from the orb at that time, then I'm looking for price to revisit the orb. Or let's say we are just about out of the orb, then I'll probably look for like the midpoint of the range. But you guys will see what I mean in the next video. So now, after all that I've said, usually I have this sort of review checklist that I do to myself. So did I trade with all my confluences? Did all my confluences hit the spot? Were they all respected? Did I respect previous day highs, lows, and different session levels as well, and the opening range? Did I do that? Was my stop loss logical, right? Was I risking the right amount for the setup, right? Did I use liquidity or the Fibonacci? So that usually, the Fibonacci tool, I don't use it as often. Like I said, I only use it when it comes to there's no levels for me to go hunt. But liquidity, yes, is very important. And also journal and screenshot my trades. This is one of the most important things, right? Because that's where you see where you've gone wrong. What did I do wrong? What am I missing? Did I miss a level? Did I miss this, right? And so that's why journaling is super, super important when you're trading. And later on, actually, I don't know if I'll post it on my IG or on my YouTube. I'll see where I'll post it, but I'll post the journal that I use and the kind of concept I use. It's very simple. And I also have I have my virtual journal where I have my photos and everything of the trades that I take, and I also have my physical one that I write down. But I usually use the physical one to write down what I've missed or what sort of mistakes I made during the trade, right? So, but journaling, guys, once again, one of the most important um, things in trading. Now, what are the key advantages to all these concepts that I've told you about my strategy? Well, it avoids fake breakouts. So, like the example that I gave you about ES and that, it helps you identify a fake out before it actually happens. So, you're going to be in advance. So, a lot of times, and this is what I used to do beforehand, I used to just use, like, okay, I saw a break on NQ, and I would never look at ES. So, I saw a break on NQ, and I was like, okay, I'm entering long here, right? For example, whatever, for breaking high. I entered long, and then I wasn't paying attention because I wasn't looking at ES. Um, and let's say maybe ES was sweeping London highs or Asian highs or previous day highs, and then the price just went down. And then I'm like, whoa, what happened here? I didn't understand. But then I started using ES into my strategy. I started looking at ES, and it helped me avoid obviously these fake breakouts. Also, the key advantages is that you have a structured stop loss and TP placement. You have exactly the levels you want, and you know price are going to go to those levels, right? And your stop loss is very, very comfortable and is in an area where it gives space for your trade um, to breathe, basically, right? Um, and there you go, back to the same concept. Flexible targets using liquidity and Fibonacci. You have professional risk management with that. And so that's basically the key advantages with this strategy. Now, the closing thought, it's a structured system, right? So if you go by the rules, if you go exactly by what I've just told you in this PowerPoint, if you go exactly how the system is built, you will be successful. You will be successful. And now I'm going to repeat what I've usually said in most of my videos about discipline and consistency, right? So you have to be consistently disciplined if you want to make it, right? So with this strategy, take the notes, take all the notes you want, replay the video as many times as you want, and replay the other video as well as much times as you need to, and take notes of every single detail of this strategy, because it's very important you get everything correct. And I used to hear this. I hear this phrase quite a lot, and it's like, before you take a trade, before you're, let's say you're confident you want to take a trade, find a reason not to take that trade. So find a reason to say, okay, there is a level here. Find a way to not take the trade. And let's say if you can't, if there's no, if you don't see a reason why not to take the trade, then that makes you even more confident taking that trade. So you take it. I don't know if you guys understand what I just said, but repeat it a little bit a second time if you didn't understand. But that's basically the rules that I kind of go by, right? So let's say I look at my setup. I'm going to find every reason why I'm not going to take that trade. And if there is no reason for me not to take it, then of course I'm going to take it, right? So, and that gives me a little bit more confidence in my trading. So, like the quote says there, trade the levels, respect the range, and let liquidity guide you guys. So that is it for the first part of this video, of this kind of video series. Yes, it's only going to be 2 videos, but I want you guys to take notes. Please take notes. It's very important that you get every single detail out of this strategy, because I've backtested it so many times. I've backtested it, and these levels, price hits levels for a reason, and that's why the market moves, right? So that's why I've set these sort of, how can I say, I set these sort of levels as my target levels, stop loss levels. Um, they're very important because that's how the market moves. The market moves as that. Um, so yeah, so that's it for me for this video, and see you guys in the next. All right, peace, guys.